Fed is likely to drop rates at least once, if not twice now, later this year. But it's not in reaction to the markets per se. It's in reaction to the fundamentals. Okay, the tariffs aside, we were already in weak shape. And so the trade war we need that economically like a hole in the head right now. Global economic deceleration, weak housing market, earnings growth grinding to a halt, VIX popping over 20%. The dollar value in question, and the bond market, signaling possibly a recession with inversion here. So these are not buy signals. Okay, so the markets are weak.
You're maintaining a bearish kind of cautious stance, Diane. I know you're, I believe, sort of cautious about the economy as well. Yes, manufacturing surveys have been bad. Everything else looks pretty good, though. Can we shake this off?
Well, we could shake it off if we had a cessation in trade wars right now, and we actually had some stimulus to get some of these moribund economies picking up again. The problem is, like what Bob Dasani had really mentioned earlier and hit the nail on the head, is how rapidly these things can deteriorate, even including disruptions in trade flows where you actually stop, say, a cargo ship coming from Asia through the South China Sea, where China has a huge military presence now. That would ripple through markets, and it is one of the tools they have. So we're not done in these trade wars. That's important. And it's against the context of a global economy that's now in a synchronous slowdown, which we've beaten off to some extent. But the slowdown we've seen in investment means that we can't keep this going. Either investment's got to come back, or we're going to start cutting jobs.
Neil, against that backdrop, and there's so much more cautiousness out there on the street, obviously, as you know well, why maintain this attitude that it's going to be all clear on the economy, that the stock market is an attractive place to be right now?
Kelly, as you well know, I'm not an economist and I'm not an analyst. I'm just an economic realist. So let's just put things in perspective in today's world. In today's world, if you look at the Dow Jones is selling at 17 times earnings, no big deal. Interesting enough, is you get a yield of 2.31% on the Dow Jones versus a yield of 2.26 on a 30-year government bond.
Wow.
Logic would tell you you're going to make a lot more money in those 30 years by being in the Dow Jones. Is it going to be choppy in here? Yes, because what you have is not the investors or the market controlling itself. What you have is the traders controlling the market. And what they're ending up doing is just buying the headlines and setting the headlines. And logic tells you if you buy or sell off the headlines, Kelly, at some point in time, you're going to deliver the newspaper.